I thought it was great because he's consistent. He made it clear that he was happy that he got a couple of good numbers. But it's wage inflation. I've been saying this over and over again. It's wage inflation because that allows everything else to go higher. If you make more, then it means your employer has to charge more, and this is the endemic inflation. David, he's not looking and pulling apart, as some of us think he is, the CPI and the PPI. He's looking at unemployment, and he wants wages lower. But he doesn't want to say it because then he sounds like Grinch, and he's not that kind of guy. He's obviously an optimistic person who is stuck in a job where he has to be pessimistic, and he's doing it in a way that I kind of like.
What part of it do you like?
What I like? Well, he's certainly gentlemanly about it. He's not someone who comes on and says, he's not a Larry Summers. He's a smart guy, Larry, but he does not. He's not a bull in a China shop.
No, he is not.
He's not even a bull. He's not a bear in a China shop either, though.
But we
come
in and we look at futures down pretty substantially
this morning. That's people who didn't pay any attention yesterday.
Yeah, but I also have, then I have people who say to me this morning, well, if inflation's peaked, is growth really going to retract that dramatically?
Who's saying inflation's peaked?
I don't know.
No. What happens is that there are industries where wages have to come down, and there'll be a bit of a news cycle for some people. There's a bunch of articles, research today about how, look, you got to look through the problems. Mm-hmm. Now, I don't buy that. I'm just saying, look, can we please give him something that isn't, hey, it's not as bad as it was? He doesn't want that. He doesn't want plateau. He wants rollback because inflation's too high. And he made it much more clear yesterday what he really wants, which he's not going to settle for a couple of cool CPI numbers and start things up again.
Right, but
wages.
But those who are buying or selling stocks are trying to understand what this all means for next year and for earnings for the companies they follow and how dramatically those numbers are going to come down.
Well, it means don't buy. Well, you have to buy cyclicals because we have an unbelievable infrastructure. We have 3 different bills that Congress passed. People are starting to talk negatively about banks because they say that the banks are asking for more. Customers want a bigger return on their checking account, so that hurts. But in general, this is just futures people waking up and saying, "I got to get out of the market." And these people don't think about the stocks. They want to get out. Are they selling Merck? Yes, Merck's part of the S&P. You don't sell Merck on this. Do you sell all of these banks? I mean, Goldman Sachs is doing what's right. They're cutting some of the compensation. That's what they said they're going to do. I think we've got some of the wisest CEOs in the country with a great Fed chair, and this is not going to be something that we're all going to look back and say, I can't believe we didn't sell. It's not going to be that. It's not.
Well, most of those CEOs right now, Jim, are not actually, some are more negative than others, but most are not pointing to significant weakness, in their opinion, as of yet, in their business.
Well, they don't have it, Carl. The enterprises out there are strong. What the Fed wants to do is make it so they're less strong, so that they don't hire, so that there is a surfeit of labor. They can't do it through immigration, although someone asked about that yesterday. The questions, by the way, were much higher quality than usual. But the questions rose to the occasion. But I just came back and I just said, all right, he's saying, listen, we gotta win more than just the CPI and PPI. We got to win in wages. I don't think he said, and that's not going to happen. I think he said we got a long way because we got to win. Yeah. I thought it was measured.
I thought it was interesting, Morgan Stanley today. It was difficult for us to follow the logic of the changes to the SEP and the chair's comments, both of which appeared inconsistent. I mean, they took the unemployment dot up to 4.6. Right? That's a serious jump in unemployment.
It is, but look, he needs to have it go. I mean, I don't like the people who say, so what happens after you win? Do rates go down? He's saying, well, can we win first? I mean, that's like saying, what happens after you beat Chicago? Do you get home field advantage? He said, no, we got to beat Chicago first. There isn't anything about him that wasn't NFL, meaning the gold standard of, I think, David, of rigor. That wasn't impressive. And he basically said, we haven't beaten this yet.
If all this is true, what's up with bonds? Are bonds like calling their bluff? I mean, we're seeing nowhere near the movement.
Bonds are calling their bluff. I think bonds are saying that he's big hat, no cattle. David, I don't think he's big hat, no cattle. I think he's real.
You think he's real?
Yeah.
But the bond market doesn't.
No. The bond market thinks he's...
Bond market often wins.
They may lose this one.
Really?
Yeah. Yeah. They may lose this one.
Others,
They could lose this.
others argue, look what happened to Liz Truss. She'll tell you what the bond market's all about, right? At what point do they force him to do something different?
Well, I think he's got a path. I think he's going to get a couple of 4% unemployment numbers. And when he gets that, I think he can say, you know what, we're almost there. And if we have a rally, and if the, like the reporters, well, sir, is the rally inconsistent with what you want? He can say, I don't care about the rally. I care about the American people.